Hey everybody, it's Mike with evening webcast for Friday night, December the 6th, 2013. Okay, I just want to do a real quick wrap up of the day. I mean, basically, it was a trend up day. We had the 83s yesterday afternoon. That went to support. We ground up, walked it up into the jobs report, did a quick spike down, could not hold it down at 86. We spiked down to areas where we had some pivots on our stuff, and then we jumped. Once we got over the middle band, we were very quick up to test and break through the original support zone of 1798 to 1801. When that support zone cracked and we went all the way up to 1803.75, the trend up day was pretty much sealed. At that point, the issue becomes can the bulls make a higher low? And all they have to do is make a higher low somewhere between 1803.75 and basically 1783 or 1782, even if you want to take the low yesterday, which is, like I said, it was a very low bar to have to jump over. And what they did here, they established the higher low right here, 1786 quarter, and we basically ground up. This is a 15-minute chart. We ground up the rest of the day. And what's even more telling is coming into the close, we went right back down 330 to test the 1801 area. 1801 holds up, and we close up at 1804.75. So the takeaways from today: the bears lost 83. The bears lost middle band. The bears reestablished what is now, I'll call it 1796 to 1801. They've reestablished what was originally a support zone, then became a resistance zone earlier this week, is now back to being a support zone, okay, underneath them. So the bulls have a lot of support underneath. Initially at 1801, next at the middle band, and you don't. 1783 now is just kind of a launching point. You don't want to get back there. 1783 will probably be a level that we talk about when we see some kind of a more substantial pullback. But for now, going into Sunday night, going into the Monday trade, you got to focus on 1801, 1796, and the middle band. If those areas hold, then I would be looking for more upside into early next week. It's playing out identically as it did in the prior jobs report. Talked about it with somebody that asked a really good question. I think his name, I want to give credit where credit is due. Floor Pivot on Twitter asked me a question last night. He asked me, wasn't it last NFP that ES pulled to middle band, then after NFP broke down, only to buy into cash session and close higher? Well, look at November 8th on a daily chart and look at today. And what you've got there is, here's November 8th. Here's today. And I would argue today was an even stronger candle. So, and what you saw after November 8th is you saw a little bit of a retracement back to test middle band. So in our situation, that would be coming back down to test the 1792 area. If that holds up, then that was used as a launching point for a 3-day rally up above the upper band. So things to watch for into next week. Small move down into 92 possibly, and then up for new highs. Okay, everybody have a fantastic weekend. I will talk to everybody Monday morning, pre-market webcast. Follow me on Twitter at Princeton Trader. Follow the website, princetontrader.com. Come and sign up for a free trial over the weekend. Had some more people in today. Come and trade with us. Come trade this stuff. Trade it with a plan. Don't trade it by yourself. Have a great weekend. Talk to everybody Monday morning. Trade them well.